Hello and welcome to Wisdom Bites. Hope you're well. Thank you once again for joining us. Very much appreciated. And in today's program, I'm going to be having a look at one of the charts which no one seems to be watching, and why that chart says with a high probability that we may well have bottomed out at the 49,000, and why we should pay attention to this. I'll also be having a look at the wider markets to see exactly how Bitcoin fits in with the news out there as well as the wider markets. And as per usual, I'll be doing an analysis on the 60-day cycle to see exactly where we are and where we're heading over the coming weeks and months. So if that sounds interesting, then without further ado, get yourself a cup of tea, sit yourself down, eyes on the screen, and let's get cracking. But before I begin, the usual polite reminder, please remember everything in my videos is just for educational purposes. So please always do your wider research before you make any investment decisions or any swing trade decisions. Okay, we're going to begin with the weekly chart, and we're going to have a look at the chart that no one seems to have cottoned on yet, and that is this particular candle. This candle here is giving us some very strong indications of where this market wants to move. And what is this candle? Many people would call this a dragonfly doji candle. Some would call it a high wave candle. Some call it a hammer candle. Whatever candle you want to call it. It's the characteristics that you need to know. And that is that once we got this evening star pattern, that we're forming an evening star pattern on the weekly chart, you would see normally a follow through of this particular solid red candle. And because this particular candle had a very small wick at the bottom, and with this evening star pattern, the high probability was for this to have a continuation to the downside, which is exactly what we got. But certainly nobody expected this to come back down to 49,000. The expectation would have been to actually retest these levels here at around about 55. But the fact that we came all the way down to this level here, 49, and then got pushed back all the way back to closing above the close of this red candle, that is quite a bullish sign from this particular candle to tell us exactly which direction the market wants to go. And remember, this is all about probabilities and possibilities, not about guarantees or certainties. So what is a dragonfly doji candle? This is it here. So you can either have it with a long wick at the bottom here and a little pin at the top, or if you scroll down here, you can see that the one that we've got looks like this one here. And you can see where the market goes from there onwards. And just for our education, we really need to know what this dragonfly doji candle is. It's a candle pattern with no real body, i.e. small body there, and a long downward shadow. And what it really indicates is a potential price reversal, either to the downside or the upside, depending on where it is. If it's at the bottom of a trend, it's indicating a reversal to the upside. And if it's at the top of the trend, it's indicating a reverse to the downside. So if we scroll down here, we'll have a look at a little bit more information on this, because this is the kind of thing we've got here. At the bottom of a trend, we've got this dragonfly doji candle. So a dragonfly doji candle after a price drop warns that the price may rise. Just like over here, we've got a big move to the upside. And this is a reliable sign of a trend reversal. So please remember, this is a reliable sign, not a guarantee, but a reliable sign, a high probability play. Now, just a word of caution here, that just because it's come down here and closed at this level, it doesn't mean it can't come back down. We know that Bitcoin has a high propensity and a high inclination to go to the 61.8. Because if you look at this particular measure here, because what we've done here at the 49,000, which didn't look likely that it would happen, is that if you take the Fibonacci retracement from the previous low, which is at this point here, and you take that measure of a 61.8 to the 73.8 high over here, what you see is a retracement to the 61.8 and 65% golden pocket level here. This is exactly where we've bounced from for the Bitcoin price. So for all intents and purposes, on the high probability play, this seems to have bottomed out here. And just similarly, that we've got a 61.8 Fibonacci play with this candle here, we could quite easily from this bottom to the next top, which is currently this candle which closed yesterday, there's a very good probability that we may well come back down to the 61.8 to test this as a double bottom. So just be aware of this particular level here of between 52,800 and 53,200. So between 52 and 53, this is very much on the cards, and then we go into the next cycle. So this is the double bottom that you should be aware of. And you'll see that that may well fit into the 60-day cycle when we have a look at that a little bit later on. Moving on to what's in the news, you can see here that in terms of the supply of Bitcoin, only 25% has been traded in the last 6 months, because 75% of it has actually been hodled. And considering that with the German government selling a lot of their Bitcoins, with the Mt. Gox selling its Bitcoins, and the Grayscale selling nearly 400,000 of its Bitcoins from its exchange, considering all that, the price of Bitcoin has actually held up relatively strongly. And if we move on to the liquidation heat map, this is a very accurate picture, as we've seen over the last many months, of the range that Bitcoin will be able to fall into. And that is that you've got a very solid yellow zone here, which means that we have quite a high propensity to go up to the 60,400 level. So the price is currently around here, around 58.5, and we don't really have many yellow zones down here, apart from this one at 57.7. So this is the range that we should be able to fall into, between 57.7 and 60,400. And you've got some lighter ranges down here at around about 56. So that is also a possibility. So this is the short-term range that we should be looking to navigate with the Bitcoin price. And we can see with the Grayscale Trust here, from holding 619,000 Bitcoins at the launch on 11th of January, they only now have 229,000 left. So this looks like, with a high probability, is going to dwindle down to as near to zero as possible. And a lot of them have been picked up by the rest of the ETFs here. And we can see that there's only one major winner here, which is BlackRock, which has now superseded Grayscale in terms of holding the most amount of Bitcoins at 348,000, with Fidelity not too far behind the Grayscale Trust. So a lot of dynamics changing around, and considering all this selling pressure from here, and the Mt. Gox and the German government selling, etc., etc., despite the fact that there's a lot of doom and gloom surrounding Bitcoin, I would suggest that relatively Bitcoin has held up incredibly strongly. And if we have a look at the ETF overview, this is the current picture over the last 7 days, and that is that we're still having quite a high bleed from the Grayscale Trust here, with 3,400 Bitcoins leaving its trust over the last 7 days. But as you can see, it's been picked up quite a lot by BlackRock, but also by ARK 1,600 and all the other exchanges here. So you're seeing a lot of nice green numbers here, which is telling us that the dynamics is now shifting more towards buying rather than the selling. And if we move on to the dollar, this is the symmetrical triangle that we've been talking about for the last many weeks now. And it was our thesis that when we were coming to the fourth level of coming into this triangle, the higher probability was for this to break down, which is exactly what it's done. And what we've got so far is a similar dragonfly doji candle on the dollar here. So you would have expected with a higher probability for this to bounce off, and it still hasn't closed. This is a weekly time frame, so we haven't closed that yet. So there is an expectation that we may well bounce back up again from this very strong support line over here. And if we zoom out a little bit, and we can see quite clearly that with the dollar, we are in a downward long-term trajectory here, making lower highs all along this way. So if we do get a bounce, it's probably going to be a 61.8 Fibonacci bounce. From the top at this point, this is the last top, to this current bottom here, we may well get a bounce up to the 104 level. So just keep an eye on this. But with interest rate cuts on the horizon on the 18th of September, we could quite easily get this run up to the 18th of September before the interest rate cuts would be able to bring this down to much lower levels. And the longer term trend is obviously down to these levels down here. And if we move on to the SPX, on the weekly chart, we can see quite clearly that after 4 weeks of a downward decline over here, we've now had a 2-week big bounce back up again. Now this could well be a 61.8 bounce back up. And if we have a look on the Fibonacci, it's actually come up to the 78.6. So this is a much stronger bounce than you would normally expect if it was going to be a dead cat bounce for this to reverse back to the downside. Of course, it can reverse from the 78.6. So it really now has a big decision to make, whether he wants to retest this top level at 5,600 and make a double top, before coming back down. But with the dollar coming down and interest rates on the horizon coming down as well, you would expect this to go to much higher levels yet. And you just have to look at the history of this, because those people who are calling an end to the bear market, of course there's a possibility that is correct, but it's a low probability, I would say, because when you look back here, this big move started at the end of 2022, just like with all the other markets, including Bitcoin. And in between, it's been interspersed by 2 or 3 weekly candles to the downside, and each time we've had a big move to the upside. So this was the bigger move down here, but then since then we've had a massive move up here with 3 more candles to the downside, 3 candles here, or red candles, or I should say 3 red candles, but obviously this one turned into a green one, but it was still much lower than the other 3. So we got 4 weeks of a decline before we got the bounce back up here again. So we really need to now know whether we're going to get back up above the 5,600, and it looks like with all probability we're more than likely going to do this rather than get rejected there. So only time will tell, but the previous 18 months is giving us a story here of what the trend is on the SPX. And if we look at the SPX on the daily chart within the framework of the 60-day cycle, we made this cycle here on day 66, and we can see that the previous cycle actually bottomed out on day 72. So maybe this was a fake end to the cycle here, and since we made a lower low, it looked like this was going to be a failed cycle. So I've just put a question mark whether we've actually bottomed out on this candle here on day 73. So only time will tell, but in order to confirm this, we need to get above this level here at 5,566. So we're coming up to test that level currently. Once we break that, that confirms the new cycle here on day 73, and then we're going to go into the mid cycle down here, and we should expect some sort of a low on the mid cycle before we move to higher levels. Let's see where this goes, but certainly it's now reversing back, as it has done over the last 18 months, from periods of small pullbacks that we've got here. And moving on to the gold chart, what we've got on the weekly time frame here, which closed on Friday, a solid green candle here. So with a higher probability, we can expect this to be moving to higher levels, because what we've got here with this green candle is a momentum candle. Now the momentum candles are 3 to 4 times the size of the previous candle here. And you can see that there's big momentum that's just come into the market here. And what we've done is, as I've been mentioning over the last few weeks, this gravestone doji candle, this shooting star, this is what's really causing this sideways movement here. There's a bearish pressure to the downside. But now that we've broken above it, it invalidates this particular candle, and we've now got an opportunity for this to move to much higher levels. So as the dollar has been coming down, you can see quite clearly the metals are going up. And if we zoom out on the monthly time frame, we can see how bullish this is and why this looks very much with a higher probability for a continuation of the bull market. So we've had this neckline all the way back from 2011. We've broken this through this cup and handle pattern here. And having broken above it, we're now getting a continuation of the bull market. How far that will go, nobody knows, but all we know is that the trajectory is definitely to the upside. And if we move on to the silver, what we can see here is that this is not looking as bullish as gold, because we're still within this neckline here. So maybe where gold goes, silver will follow. And what we've got currently on the monthly time frame, if we look closely over here, although we haven't closed the month yet, if you are invested in silver, this is the one to look out for, the monthly time frame candle here. And this is why I wanted to give you that definition at the beginning of this video, because we've got another dragonfly doji candle forming on the monthly time frame. So obviously we've still got about 11 days more to go yet, but this is what I would be looking for if I was invested in silver. If it closes the way it is here, this is a very good, strong signal for this to be going higher. So if I was wanting to accumulate, this is where I would be now accumulating. And if we have a look at the weekly time frame, that's been confirmed here by the tweezer bottom 2 candles here. So what we've got at the bottom of this trend, we've got a red candle here, followed by an even bigger body of a green candle, which is a bullish engulfing candle, as well as what we call a tweezer bottom. These are reversal patterns for those people interested in candlesticks. So you've got a bullish engulfing candle, a tweezer bottom. So this is a reversal candle now to the upside. And we really need to get above this level here to break this lower high trajectory here. And moving on to the Bitcoin 60-day cycle, we are currently, from the start of the cycle here, we're currently today on day 45. So we are within the realms of a bottoming out any time between where we are and the expected end of the cycle on the 3rd of September. And currently what we're forming is this particular symmetrical triangle here. And we should be able to break out of this any time very shortly, as we are coming right to the end of this triangle. So expect some sort of a volatile move anytime soon in the next few days. And as I mentioned earlier, when you take it from the 49,000 down here to the recent top that we've made at around about the 62,700, there is a possibility for this to come back down to a 61.8 Fibonacci pullback, and that would give you around about the 53,000 mark here. So what that does is it gives you a bottom and then a second bottom round here before we move into a new cycle here. So wherever this bottoms out, if we come into this 61.8 Fibonacci level here, into the 60-day cycle low, then this is probably where the new cycle is going to start around here. And as I mentioned over the last few weeks, we really needed to be consolidating at these higher levels around the 70,000 level for us to break above the all-time high of 73,800. So this cycle has really played out with a consolidation more in this range here, which means that once we have a new cycle here, we really need to get above this level here and then consolidate in this range for the next cycle from the 3rd of September onwards until November. And that is when we should expect a move above these levels here. So if we can consolidate, this is the actual big if here, we need to be really consolidating in this next cycle until November to give us an opportunity to break and test this 73,800. So this is where I see the market going. It looks with a higher probability now that we're going to make a new cycle low anytime between now and the end of August to create this double bottom here and a follow through for the next cycle above the 62-63 level. Okay, before we finish, I just want to touch on something very, very important and something that I touch on many times in the past. And I've been noticing that in the last month or so, while the market has been coming down and a lot of frustration seems to be creeping into the market, I am noticing one thing: the attitude of some of the people who are in this space seems to be going down the road whereby they're really setting themselves up for failure. It's very easy in this space to get sucked into the emotions of a volatile market, especially when there is a pullback and especially when everybody's expecting the market to go higher. It can be very draining, it can be very frustrating and irritating when the market does the opposite. So just for the purposes of adding value, I just want to mention that please keep this in check, because this is the one that's really going to let a lot of people down. If you don't have the right attitude in this space, what you're really doing is setting yourself up for failure. And I really want to come back to this particular quotation from Zig Ziglar here. And I've shown you this many times before, but it's something that we really need to come back to and remind ourselves that our attitude and not our aptitude is what will determine your altitude, how high, how far, how successful you become in life. And I really mention that here because I have noticed over the last couple of months in some of the comments that I've been getting, there's been an element of some negativity there. And what that really signifies is that there's a lot of people who are getting very frustrated and irritated and annoyed and angry with what the market is doing. And what we're getting here is that with 6 months of solid consolidation going on, i.e. the market's going just sideways, as you can see, within a particular range from 70 down to 50, it's not too dissimilar to all the comments that we were getting here when we were consolidating in this particular range. And at this point, people didn't even believe that we were in a bull market until we broke up above here with the ETFs. So I would always appeal to people's good nature, and in order to add value, that please keep your attitude in check. Don't get frustrated, don't get irritated. And I come back to this particular chart here, that we're on this journey from the bottom of the bear market here, and we're only about 3/4 of the way to the end destination, wherever that's going to be. It's looking more and more likely to be between mid-2025 and the end of 2025 rather than the end of 2024. So this is a journey which will probably last between now and this time next year or towards the end of next year. And people thinking that they're making very bad losses at this point, well, that's only because you probably got in at a much higher price. But if you take a full cycle view, which is this full cycle here, if you take this full cycle view, then you wouldn't get too worried about some of the pullbacks that we're going to get along the way here. And it's very similar to what's happened with the Bitcoin miners since the end of 2023. You can see quite clearly here, the last 8 months, I'm representing the miners with the Marathon Digital Holdings, and the price here has just been going sideways. But look where it's coming from. When we bottomed out here, we're on this trajectory. We're always going to get periods of pullbacks along the way. And these are usually, from a chart structural point of view, these pullbacks are usually the prelude to a big move to the upside. So you can expect when this consolidation finishes, we're going to get a big move to the upside. And that may well be the last final parabolic move in this bull market. So we've got to really be aware of that, because in the private member section, these are the current results that we've got so far. So at the end of the last bull market, we timed it absolutely perfectly, where we started the private member section and started this portfolio on the 6th of January in 2023 with a starting capital of around $100,000 and a target of $1 million by the end of the year. But by the end of 2023, we'd reached $434,000. And with that money, we carried it forward to the 2024 portfolio. So you can see that that $434,000, we started in 2024 with that same amount. And currently, this year, because of the big pullback with the Bitcoin miners, we've had a pullback of over 50%. But the passive portfolio, by choosing just the right miners, we are only 20% down at the moment at 347,000, which is still much greater than when we started around the 100,000 mark. And this is why we need to keep a good attitude. And usually what you find is whenever there's a pullback, people don't join the private member section when there's a pullback. They join when the prices have gone up by substantial amounts. And that is the wrong time to join. The time to join is obviously when there's a big pullback, because if you're going to invest in the Bitcoin miners, you need to invest when the prices are low, which is currently what's happening at the moment. So in 2024, as you can see here, we used this money that we had at the end of 2023. We tried to make a comparison of what it would be like to just leave this money on its own, i.e. in the passive portfolio, i.e. we choose 6 or 7 miners and we do absolutely nothing from the beginning of 2024 to the end of this current bull market, and see where we get to with that. And we use the same amount of money. Instead of just leaving it alone in a passive portfolio, we actively trade using what we call here ratio trades. So that same amount of money, by doing active trades now, and I'll show you those trades in a second, by doing those trades, this portfolio is only 1% down while the miners are 50% down. So the original 100,000 in the trading portfolio has got to 430,000, which is nearly 100,000 more than the passive portfolio. And our target for the end of this bull market is 5 million, which may seem a little overstretched. But this portfolio just a couple of weeks ago was at 720,000. And we're expecting a 10x on the miners should the bull market continue and end where we're expecting it to end. And on that trading portfolio, these are the results, the profit and losses on 17 trades. So the blue are the plus ones, i.e. the ones that we made the money on. So out of 17 trades, we've got 16 where we made a profit, as you can see here. So you can see that even while the markets have been going sideways and down, we've been able to make quite a lot of successful trades. And we're currently in 3 trades. This one here, this one, and this one here. So we're just waiting for the conclusion of those 3. And we'll continue to do that between now and the end of the bull market. And if that's something that you're interested in. But as we know with Bitcoin, that's a very volatile asset. And with the Bitcoin miners being a leverage on Bitcoin, i.e. we expect Bitcoin miners to outperform Bitcoin by at least between 3 and 5 times over the course of the bull market. So obviously the miners are a very volatile stock. And if you're not very good with the volatility, then it's not for you. But if it is something that you're interested in, then you'll see that below each of my videos, there's a join button here, but also in the description box, there's a red join button here as well. When you click on this, you'll see for the price of a coffee per week, you can join all the Bitcoin miners, all the updates, and we do a market update every evening at the end of the close, Monday to Friday. And everything is in the membership tab here on my channel. So you'll see we do market updates here. The videos are all there for the members, which we do on the Wednesday and the Friday. And we also leave all the ratio trades on this tab as well. And all the articles and all the charts which are relevant to the miners as well as Bitcoin. Okay, we'll leave it there. I hope you found value in the video. If you did, then please do remember to like and subscribe if you haven't already done so. And if you've got any comments, leave them in the comments below. Until the next time, take care, stay safe, and I'll see you in the next video. Bye for now.